Hi and welcome to the market alert for Monday the 24th of January 2022. So market screamed panic to Powell as 2022's tech wreck is the worst in over 30 years, meaning no dovish pivot to relief unless things get much worse from the market side. Yeah, so the market selling off quite sharply, implied volatility also moving up as well, 2170. And you can see they're breaking out at the moment, but we're not above the 2378, which we saw in November there. And in the news, well, we kick off the week with flash news. Notice that the forecast for all of this is less than the previous months, or more or less there, either equal to or less than. And yeah, we'll see what an impact this has on the market day. It's a messy day with the flash because the market waits for the next event, and within half an hour of the release generally, apart from the US of course, which is 2:45. Not a lot for Tuesday, but Wednesday's the big one. We got the FOMC statement, Fed funds rate, and the press conference. The press conference used to be quarterly, but I'm sure Yellen changed it to monthly when she was in office. No change on the interest rate. And then that's about it really. We got advanced GDP on Thursday for the US. Forecast at 5.3, previous 2.3. That's optimistic, isn't it? And Friday core PCE price index, which is more or less coming out the same. So barring the FOMC statement, there's not really a lot of news out this week. Let's have a look at the markets. We'll start off with the Dow. Let's have a look at the daily. Actually, let's have a quick look at the weekly chart. You can see there the market coming down sharply during last week and trading too, as you'll see there, bang on 89% retracement there for the weekly chart. Also within a cat's whisker of the 50 bar moving average as well, finding a bit of support overnight for the weekly chart there. In the daily, again, you can see that 89% retracement with a bit more detail. You can see they were selling on Friday, were oversold, and the market's reacting to this by attempting to move back to the upside at the moment. So the first fib really is this high to this low. So let's just draw this in, and they're the fibs on the upside. The 200 MA tying in with the 38% retracement there. On the downside, of course, you can see that we've got this low here. Should Friday's low be taken out, then we go straight to this low, which is 33,949. And I'm just going to compress this up a bit. In fact, let's go back to the weekly chart and have a look, and you can see that the next downside target, should prices move lower, is here, which will be, it's an interesting step effect that we've got here, isn't it, trying to hold. You know, got this pattern here trying to make new highs. So we'll have to see if the market will hold that the 89% retracement there. If not, like I say, we take this one out, and then this is the next one on the downside, and then we start to really move quite a distance away when you step back and look at the bigger picture. So going back to the daily chart, important area here to hold at that 34,279 for the Dow. And in the 30-minute chart, you can see again the carnage on Friday as the market was marked lower. I can see prices from Friday's high down to 9 p.m. close there, just down to there, 648 point drop. The market rallying back at the moment. Was sort of a bounce if we got point wise, just coming back up to the high there. So we're back nearly 50% of the complete move there from Friday. So let's just draw in some fibs off this as well, and then 62. We're at 50% at the moment. Let me just grab the 50% so you can have that on the chart, and let's just draw this in, and then you can see there's your 50%, and we can see the market's heading back to that at the moment. And then we've got the 50 EMA there as well. So keep an eye on these levels in the 30-minute. We've seen the bigger picture in the weekly and the daily, and now on the upside we can see this on the short term. On the side, the downside, should the market move lower, there your fib retracement areas as well. got to take out the 20 and importantly the DP as well. But at the moment the market holding its own sideways. Depends on the manufacturing figures when they're released from 7 AM for Germany. In the German DAX, we've got a similar picture, except we're at 62% for the DAX for Friday. The market trading down to this level, coming back and just trading back above. In the bigger time frames, if we have a look at the monthly chart, you can see the market down for the whole of the month of January so far. And in the weekly chart, you can see we've been making lower highs for the last 2 weeks. The market trying to find some support, as we can see here at the moment, sitting at that 62% in the daily, which of course you will see across the time frames because we're stepping back from the action. So a bit of support there. So let's draw the fibs in for the week, just in case this is the low for the week. There are a set of fibs there with targets to the upside. So back in the daily chart, again you can see 62% retracement. Short-term fib to the upside will be drawn from here to here. So let's just draw that in. And again, keep an eye on these levels should the market move higher. Any failure on the upside and the market sells off, these are the two downside targets in the daily chart for the German DAX, which is quite some distance behind volatility wise to the Dow, which has already traded back down to 89%, whereas the DAX is nowhere near it at the moment. In the 30-minute chart for the DAX, again you can see very, very similar picture to the Dow. The market trading back to the DP, and if we just draw in these lines here, this is where you can expect some support on the downside, and on the upside from here down to here are the upside targets. Let me just drag these out so you can see the difference. We've already been gone through 38 and 50. We're stuck at 62% retracement on the upside there at the moment. So we had scalp trades, but a lot of these came back more or less to break even, unless you actually took the money at the optimum point, which is impossible to do. So not a lot for Friday. I know the first one, this one is discounted because it was already still short in this one. The market traded down 30 odd points, but then bounced back very, very quickly as there was demand coming into the market. And also we've got an 89% retracement there. Then we go back up to a 78% retracement before coming back to 78, 89 again. Then we go to a double top there before the market retraces slightly there, but just stuck in a sideways range. And in the afternoon, the first trade moving to the downside, but then this was superseded by a buy signal. The downside was a loss of just over 20 points, 22 to be precise, with the slippage in the spread. Then the market traded to the upside. Again, you can see just trading to 78% before moving to the downside, and that one with the break even. So a bit of a messy day on Friday, and then unfortunately we didn't get a counter signal to trade to the downside there. And that's what's so good about the new trading strategy. It will actually highlight and pick all of these areas a lot quicker in the markets as well, because of the additional indicators that are actually used to isolate the potential trades. Now the market is sideways overnight. You can see at the DP there in the smaller time frame, a bit of resistance at the DP at the moment. In the metals markets, let's have a quick look, and you can see in silver, downside pressure now back in this market, having been allowed to move up. We're oversold, we've got divergence, and we traded up to the 200 MA. The market wouldn't take it out. We've got an increase in selling coming into the market, and also at 78.89 as well. So expect our friends from JP Morgan or whichever bank is involved these days to come in and sell this market, certainly back down to this sort of area. They're not going to let it go up in a rush, unless of course war breaks out, but then you'll see the dollar spike to the upside if that's the case. And you can see it's been holding even despite the fact that silver has moved lower. and closing above those averages as well, the 5 bar in particular, momentum to the upside, so the dollar index free to move up to 89.78 as well. If it's to be the case, it's all down to what they allow with gold. Gold allowed to move up, so the war drum's still beating there, so gold up, silver down, so that's going to impact on the gold silver ratio, which you can see the pressure that silver's under because it's starting to run back towards that sort of 80 level, which is a crucial level for the gold silver ratio. And then finally, crude oil continues to move higher as well, with the prospect of Russia invading the Ukraine, according to the media this morning. So there we go, an interesting backdrop from Friday all the way through the overnight to what we're seeing, and it's just a matter of let's see what unfolds today. Particularly we've got the flash news first thing, and then it'll be over to the news to see what happens with regards to Russia and the Ukraine. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.